Hello, in this video we are going to look at how to get a set of accounts set up. So all we've done so far is go into the accounts production, we've opened up the client and we've set up a new period, and then I've opened it there. So that's the point that we're at. We haven't done anything else just at the moment. So if we start at the top in the client information, you can see all of these bits should be pulled through from the client record within TaxCalc, which should have been pulled through automatically from Companies House. So that should all be correct. Sometimes this box needs filling in, sometimes it's empty. I've not worked out why it does it, fills it in some accounts and why it doesn't in others. So just check that that one's filled in. Go into the address. Again, if we've prepared accounts in this in TaxCalc before, then all of this stuff should be pulled through. So just check that it's all pulling through correctly, and then same with officers, just make sure the directors have pulled through properly. Then into the account setup, we start with the accounting standards, and that's basically, it'll be the option between FRS 102 1A and FRS 105. For the most part, when we're dealing with a small company that we know is going to stay small, maybe because it's a single person effectively acting as a service company, then we might opt to prepare the accounts in FRS 105. But in order to switch between the accounting standards, you've got to do restatements of the previous accounting standard. So you need to make sure from year to year that you're using the same accounting standard. If we're using FRS 105 in previous years and we're now breaching the limits of the FRS 105 and we have to move to FRS 102, then we do need to go through a whole restatement process so that we can start using FRS 102 going forwards. That will be the subject of a separate video because obviously it won't apply to most sets of accounts. So for most of our clients, we are under FRS 102, but some maybe new companies that we set up, they might be under FRS 105. It should pull forward the accounting standard that we've used in the past, but just double check it. And for terminology, we usually use the Companies Act headers. So we're talking about profit and loss and balance sheet rather than the financial reporting standard headers, which is talking about income statements and the statement of financial position. You'll see later on that the profit and loss, we're not actually going to use profit and loss. We're going to use the comprehensive income statement, but that's on a different page. So just leave it using the Companies Act. That, I think it defaults to that. You should never have to change that. The company status, if it's dormant, then obviously select the appropriate ones there. But other than that, leave it as active. I don't think any of our clients are audited. So again, just leave audited there. Now the accounts presentation, this should pull through as default. We're not displaying any logos on anyone's sets of accounts. We are keeping the name of the firm at the foot of the first page, but we're not putting any more information on there, just literally the name. So you should just need to leave that, all of that well alone. And financial statements, again, leaving all of this stuff here. There's how you restate comparatives if you're changing the financial reporting standard. But again, you should need to leave this alone for most normal sets of accounts. And here is where we choose the different options of reporting. We shouldn't need to change this top one, but we will need to be changing these bottom ones. For the most part, we want a single statement that shows all the income and then the retained earnings at the bottom. Very occasionally, if you've got more things happening in the share, like share transfers or revaluations happening of fixed assets, we may actually want to just include a separate statement that has the changes of equity in it. And I'll show you the difference quickly. So I'll leave it as neither, go into the reports and go to financial statements. And if we scroll down to the profit and loss, you can see here that we've got all the standard profit and loss information, and then we've got the profit after tax being the profit for the financial year, and that's where you get your double line, and that's where it stops. If we go back to account setups and here and go to statement of income and retained earnings, go back to the financial statements, it will re-prepare this account, or this statement rather. There we go. So it's now called the statement of income and retained earnings. It starts with your turnover, blah, blah, blah. And then, this was a bad example because there's no retained earnings. Well, that's interesting, actually. Should be. Shareholders fund, profit and loss account. There should be £241 in there. Oh dear. I know. Because we need a figure brought forward. If we go into posting, I'll explain a little bit more about this in a minute, but if we bring forward the opening balances, then go back to here, then we have got, well, full financial statements. I think this will. Ta-da! Right, so now that's where the report finished when we were selecting none in that other page. And now we've got the retained earnings information. So we've got the closing balance as at 2020, and then the opening balance as at 2021. Clearly there's a pound difference there, so that's going to be fun to figure out. And then if we issued dividends, then we'd have dividends line in the middle here, showing how many dividends have been taken out. If we go back to statement preferences and change it to a statement of changes in equity, and then go back to the financial statements. As I said, we shouldn't need to use the statement of the changes in equity statement too often, because for the most part, if it's just the standard share capital, it hasn't moved, and there's a standard profit and loss movement and maybe some dividends, we wouldn't create this. It's only if there's other things going on, because it's easier to see how the changes in equity have actually come about. So it just means you've got those figures there that we looked at just now. So it's just broken down differently. And then that just leaves the profit and loss as the standard profit and loss. So for the most part, we are going to want to leave it on the statement of income and retained earnings, because that shows the breakdown of the dividend and the retained earnings on the profit and loss. We don't need to do anything on that page. Chart of accounts, we don't need to do anything on, and report terms, for the most part, we don't need to do anything on. But if you do need to change anything that you need to show on the face of the financial statements, maybe a name of an account somewhere that needs to be more clear about what it is, then that's where you do it. Then we move on to the posting. So as you saw just now, we created opening balances. Now we don't do this for every set of accounts, but for this one we do, because we've got manual accounts. The client sent us a spreadsheet with the information that we need to be able to prepare the accounts, and he's pulled that straight out of the balance, out of the bank account. So what that gives us is the movements from through the year. And when we're going to post movements like that, we're going to want to bring forward the opening balances from the previous year. Then we post the movements, and then that will give us our final position for this year. If we are preparing them from, for example, 0, our historic information should be correct. Our opening balances at the beginning of the financial period within 0 should match our closing balances of the year before, of the last year of accounts that we prepared. If that's the case, then we can just bring in those balances as at year end, and we don't need to bring in opening balances. The other time we might want to start with opening balances is if we've got maybe an old Sage file where year-end balances haven't, or year-end journals haven't been posted in, and so we don't actually know what state that opening figure is at the beginning of the year we're looking at. We don't know what state it's in because previous years haven't been posted properly. Year-end balances haven't been posted properly. So just to make sure that we're starting from the right place. We're going to bring forward the opening balances. And then when we run the trial balance within Sage, we just run a movement trial balance. So that's a different one from the normal one. You've just got to make sure you're just pulling the balances out from the movement within the year. A little bit more on posting under different batches. When you pull information in from somewhere, don't touch it. So if you pull in these opening balances, don't touch them. If you need to change something for any reason, change it in a new batch. The same with Xero. If you pull information in from Xero or manually through CSV from Sage, leave that as a single batch and don't touch any of it. The reason for that being is that we can see where the starting point was in the original software, where it came from. And then what you can do is set up new batch. And so, for example, with this one, my new batch will be the movement, oops, I can spell, movements from bank. And I'll leave that as a trial balance because in effect, it is going to be a trial balance. It will be a movement trial balance. And then I'll start pulling out the numbers and of the accounts that I want to post into there. I'm going to save and close that so you can see that we've got a second posting here. And then what I might do finally is, let's say you had prepared those ones. You're happy with the accounts at that point. I'm now reviewing them and I see a couple of things that I want to move around. So I'm just going to put in EBH journals. These ones are journals, so I'm going to post them as journals, save and close. So we can now see we've got the original opening balances, we've got the trial balance movements, then we've got the journal. Sorry, there's a £1 difference there. £1 debit. I'm just going to get rid of that because that's just really annoying. Good, it's gone now. And the red box around there is gone, showing that this is all in balance now. So equally, if you pull information in from Sage, from Xero, then you'll have your Xero entry there. You might have your own journal entries there, and then I might have journals there. And then also when you prepare your tax return, long stay hotel, we need a new return there, use accounting period, that one, create. Import, there's not actually anything to import yet, but we'll go through the process. Okay, so it already thinks there's a 19p corporation tax due. So if we go to check and finish, in here, once you've gone through the whole process of setting up the accounts properly, setting up the tax properly and make sure that everything's in there, then you can post the tax journal, post that to the financial year that we're working on, post it, post and view, and then it's going to take us back into here and you can see that it's put it in as its own batch. If you don't touch that, then later on, if you need to re-import, you make some changes to the accounts, you re-import the tax, re-import the accounts under this one here, you re-import it, it changes the tax figure, and then all you need to do is go back to the post journal page and you can press post journal again and it will update that journal, that batch. It won't add to it, it will just update it if you don't touch it and do anything else to it, because it knows what it's posted and when it's posted it. So for the most part, that's pretty much as many batches as we should need. Possibly you might have opening balances, trial balance from the workings on the spreadsheet, and then have your own journals. And then I might have a journals line and we'll have a corporation tax line. Occasionally we might have a dividends line if we decide to separate it out. But for the most part, I would kind of like my journals to stay in my batch, your journals to stay in your batch. And then it's quick and easy. We'll only have sort of 4 or 5 batches there and we'll be able to quickly go to where we need it. There's not much else here other than the import trial balance. I'm going to go through that as a separate video. because there's a few different things that we need to consider on that one. So I'm not going to do that here. Notes. There's not much to say on this one. It will automatically create the ones that are required. The main one being the average number of employees. There will need to be something in there every year because that will get rejected from Companies House if it's not included. But it does show up. If I leave that one and close, save and close, and go to check and finish, we can see the errors here, and the average number of employees is always going to be red. So you can just jump in there quickly, put the number of employees in. You can change things on the notes. You don't need to. Sometimes when I'm submitting to Companies House, I'll remove all the breakdowns because you don't legally need to include all of that information. It's useful for the full set of accounts that the client sees because they can see very easily how that creditor's figure on the balance sheet is broken down, but that doesn't need to be broken down as much on the Companies House submission. So you can remove those breakdowns a bit if you want. I tend to on bigger companies that might show some interest from people, just removing as much information from Companies House as I can, unless they want the information on Companies House, because the more information is available publicly through Companies House, and if the company is a good company, then it would increase the credit rating because more information is available to the credit agencies. That's pretty much it on there. I'll just run through the accountant's report when we're setting that up. I'm IFA registered, the company is IFA registered, so as in SGW is IFA registered, so you need to make sure that you've got the IFA and update. That just means it starts talking about the Institute of Financial Accountants. We don't need to put my name or anything into there because we're not signing an audit report. It's just an accountant's report, so it doesn't need to have a name to it. And what it will do is it will sign off, I'll show you in a minute, it'll sign off as SGW Accountancy Services Limited. And then we just need the date of signing. I would leave that empty for now while you're preparing the accounts because you won't necessarily know when the client's going to finalise the accounts. That's basically, I'll stick those dates in just before I send it out to them, sort of dated a couple of days in the future, depending on how quickly I think they're going to sign off. And then that will be done and ready to submit. I don't think there's anything else here that I want to talk about. If you've got multiple directors, you can have multiple directors signing the balance sheet, and I think the report of directors as well. Where's that one? There. So you can add multiple directors and it will just have several signing areas. I would just copy what's been done in previous years. There is quite a lot more information that you can include in the report of directors. We should probably be including the principal activity. If you've got a relatively simple explanation, so if you want to include that, then yes, and say or serviced accommodation. Save and close. So that's pretty much the notes section. You can bring forward the notes from the previous year, which is useful because if you've made any specific changes, at some point I do want to be, no, it's not in there, it's in the accounting policies. I do want to be updating this so that it's a little bit more relevant to each company that we do, but that's not high on the priority list just at the moment. So I'll do a separate video on that one and squeeze it in where it's relevant. Then we've got the reports. You can see, obviously I've jumped in here a few times in this video. You've got the trial balance here. That will show last year, so you can see now that it's populated the opening balances. That's clever. Yeah, anyway. Oh, that's because that's what we pulled in, isn't it? Right. Yeah, so it's pulled through the opening balances. You've got this year versus last year. You've got variance calculations there. So obviously these that we haven't pulled a balance, a profit and loss in yet. So these are all saying 100% decreased. And these ones won't have moved very much at all because they are just pulled forward. So that is basically that bit. Financial statements, again, that produces the full set financial statements. Oh, actually, I'll just mention this when it's finished. In the trial balance, if you go, what's that 19p? You can click on there and it will open up the nominal ledger posting for that account, and it will show you all of the entries into that account that make up that 19p. Obviously, in this case, it's just the one, and you can see it's exported from the tax return. And you can actually go one step further, and if you click on that, it will take you back to the posting batch that it came from. So if you wanted to update the narrative, for example, then you could do there. And annoyingly, when you change something, I think if you exit, it doesn't work on that one because you can't. But if you save and close that one, it then resets the nominal ledger, so it shows you everything. So then you just have to jump back to the trial balance, and then you can start seeing what else is going on there. So that's quite a useful feature. It just means, so for example, if you've got in 5400 the director's loan account, if you've got some of it's allocated to the director and some of it's unallocated, you could just click through to 5400 and it will show you a list of all of them, and you can just go through them one at a time to go and see where it will take you to the right place in the posting list where those accounts are, or where those lines are, so that you can update it and allocate it to a director. So that's quite useful. The registrar financial statements will show you the, they're not called filleted anymore, what are they called? Amended? No, not amended. Oh, I can't remember the word. Short version of the accounts that you're going to submit to Companies House. There's a balance sheet, but there's no profit and loss. So it's just a really reduced set of accounts so that it doesn't show off the full trading information of the company. And then if you need to, there's lead schedules, but we don't really use that in our process. I might actually see if I can get rid of that. Audit trail is quite useful. You can see where everything's come from. And that's pretty much it. If you go on to check and finish, it shows you a list of the errors that are still outstanding. Obviously, I'm expecting some of these to still be showing when you send them to me, but most of them should be cleared. So if there's any red boxes, I don't want to see them. The name of the director. So you can fill those ones in because that will be, certainly when there's only one director, there will only be the one director. If there's more than one director, just check last year's accounts and see who signed them off. Then you can clear those ones. So basically, these ones are the only ones I want to be able to see. Everything else should be cleared. And if you're not sure how to clear it, come and talk to me. Or if somebody else set you the accounts, another manager set you the accounts to do, then go and talk to them first. You shouldn't need to do too much else in this section. That is printing the financial statements, but you can do that from within the reports section. Creating the IXBRL accounts file, you don't really need to do that because we don't even need to do it. The tax app will pull through the IXBRL accounts automatically. You don't need to run them or anything. Or you obviously don't want to file the Companies House until we've confirmed and had it all signed off with the business owner. You don't want to lock the accounting period because you probably won't be able to unlock it. I'll have to log in and unlock it. So don't lock that. And document manager, that's not connected up to our document manager. So you shouldn't need to do too much in this section other than just go to the check and finish just to check the errors that might be in there. So that's pretty much everything I want to cover for this, this video. It's just going through and getting everything set up correctly. In the next video, we will look at actually populating with numbers. All right, bye.